In this video, we'll look at a crypto exit strategy and when to figure out when prices are overextended to the upside, where you can take profits or sell some of your crypto to redistribute around wherever you want. So I'll leave timestamps for this video down in the description for all of the different metrics we can look at. All of the different sites that I'll show you are listed down there. These are all free and you can get this data as well. Now, the first thing is figuring out what drives asset prices. If you figure this out, it makes things so much simpler. The way that asset prices move, because we value Bitcoin and crypto and everything else in dollars, right? And so you're not just looking at the Bitcoin price, you're looking at the Bitcoin price versus dollars. And so that's two sides of a trading pair. The US dollar is actually as important as the Bitcoin side over the short term, because that is the thing that drives asset prices and human behavior. When the central bank, which has complete control over the supply of dollars, forces them into the market, people work more, GDP goes up, everyone feels better about themselves, and asset prices rise. And when they pull that out, that's a bear market where everyone says money's tight, literally. So if you figure out the movements here, you can time the market much better if you're looking to sell. So go to this site, linked in description. This is global money supply measured by M2, right? There are other metrics as well, but this is a great one. And we are seeing the year-over-year growth rate of that. So you can see this histogram here, right? The white line here is the Bitcoin price. This red line or pink line up here is the total money supply. And as you can see, it basically goes up and to the right over time. But this right here, this histogram, is the growth or contraction of that. And you can see that there are periods of growth and periods of contraction. It's pretty easy to figure out that when there's a contraction in money supply, that's a bear market for Bitcoin. When you have this growth of money supply, that's a bull market for the white line here, which is the Bitcoin price. Then you have another bear market for money supply, or a reduction in the growth year over year of that money supply. You have a bear market for Bitcoin. Another growth area and a bull market. Another pullback and another bear market. And now we're in a bull market now. Money supply growth isn't massive, but if this starts to peak or move up to higher levels, that's when you know Bitcoin's probably going to be quite highly priced and you can maybe time some exits there. That's the first thing. The other thing is to look at the year-over-year supply growth on this site, Bitcoin Magazine Pro, a great site here. Very clearly see you get a bear market and the year-over-year growth for Bitcoin, very low. Then you get this huge bull market in money supply growth, bull market for Bitcoin. Bear market, bull market, bear market. You can see right here, as of making this video, money supply growth is growing, but we haven't had that huge spike in the Bitcoin price. When Bitcoin spikes up, then you're looking to sell some, that is the time. And also if you're looking at altcoins as well, they're gonna be pumping a lot when money supply is growing a lot year over year and you have a stimulus from that money supply flowing into markets. So you basically just need those two charts. You can not watch the rest of this video, just go and see them. And then when they're peaking up, just sell some of your crypto. If you want a more in-depth guide on actually making investment returns, check out the Crypto Investor course below. How to actually figure out where you are in a cycle, when to make buys and sells, and how to make investment returns over the long term, not just speculating in one cycle. On-chain analysis, how to perform that, all of the different metrics, how to gain exposure, how to get in and out, and different tax treatments around the world so you can legally pay as little tax as possible when you're making your investments, how to actually trade, technical analysis and everything else. I'll link it below if you want it. It's a complete investment course, 300 videos as you can see. I update it for free over time as well. I've actually updated it in the last few days as well. That's free for existing users forever. Check it out via the link below. I'll show you some other data points as well so you can get more confidence of what you're buying and selling and when. So just like TradFi, crypto has certain different assets. You have Bitcoin on the kind of more mature end, and then we know the kind of long tail of altcoins, which more speculative, crazy volatility, etc. Right? Well, that's the same in TradFi. You have US treasuries on the low end, and then you have stocks, and then you have maybe Russell 2000 or penny stocks, right, which go up the risk curve, which are way more volatile and get pulled around way more in bull and bear markets. It's usually the lower end that actually outperforms first. And then as a wealth effect kicks in through the economic cycle is banks creating more credit. That's currency units chasing goods and services, pushing up the price of goods and services, right? Which means in the stock market, those companies, because there's more currency units chasing goods, their revenue and profit forecasts should be going up. And so people come in and buy the stocks, right? So it goes treasuries first, actually interest rates coming down, the bond price is getting bid up. That first, then that leads into the stock market as you look forward a couple of years and say, well, their revenue is going to be good. And that looks forward to, there's a lot of money sloshing around. People have made money from their stocks. There's more currency units in circulation. People feel like they've got a bit of money. They've made some money in their stocks. And now they go into, hey, you know what? I want to buy that watch, or I want to take some more speculative trades, etc. That's how the market cycle works, right? Same in crypto. Usually Bitcoin goes first. People make some money in Bitcoin, then they start getting confident and start going into other things. There's some money sloshing around, and so you get new apps or whatever being launched, and you get that activity. Well, this is Bitcoin dominance, right? So what we can see is that Bitcoin dominance over the last few cycles, you get Bitcoin dominance going up. That's usually the start of a cycle where altcoins are still trying to figure out the last cycle where they had good returns, but now they're coming back through Bitcoin. Bitcoin then goes first, you get that wealth effect, and then you get some speculative flows into altcoins. Bitcoin dominance comes down. And we're seeing that again. Bitcoin is outperforming again. And at some point, if Bitcoin does perform very well, then you get that wealth effect flowing into different altcoins, right? Well, we're not really there to this previous resistance level yet. Maybe we get there. At some point, Bitcoin may top out for its cycle because there is always an alt season where you get so much money being made in Bitcoin that flows through to different types of assets. And so you will get some sort of renaissance in altcoins where they outperform and Bitcoin dominance maybe comes down a little bit. So if you're looking to sell Bitcoin, then I'll show you in a second the Bitcoin price chart. However, if you're looking to sell altcoins, then obviously you're waiting for some sort of outperformance of those altcoins to actually sell. And so you'd be waiting at some point for the cycle basically to be over. And the tail end of the cycle is when the more speculative stuff tends to outperform, right? And you can see that here. Now, whether it's actually going to go from this level to that level, it doesn't really matter that much. You're just looking for a reversal where altcoins can outperform, and maybe they outperform for a few months, right? So this was a few months of outperformance right here, you know, looking at kind of 26 weeks or so. So not a lot, right? And then Bitcoin starts to bottom and outperform again. So you've got some time. This is BTC.D. So go to TradingView up in the top left, just type BTC.D. This is Bitcoin dominance, and you can see that here, and you can try and chart it yourself and figure out if you do want to sell some altcoins. You want to wait for that altcoin season. Well, when is that? It's when alts are outperforming BTC and taking away some of its dominance. We can also look at other types of charts to figure out where we are in a market cycle. For example, the psychology of a market cycle chart is very popular, this. You can try to feel where the market is and the sentiment of the market. Right now, as of making this video, sentiment is through the floor. Everyone's scared. Everyone thinks a recession's coming. Okay, so we're not at the top of a market cycle then, are we? And you think, well, if everyone's scared, I don't want to buy now because the price might go down. That's actually when you buy. And when you sell is when everyone is euphoric. So at some point in a market cycle, everyone's going to say, all of those fears we had haven't come to pass. We're euphoric, we have belief, we think everything's going well, and we're happy to pay higher prices. If you're looking to sell, you have to sell into that, because at some point they'll get complacent and you'll start getting another bear market. But if everyone's scared, that's not really the time to sell if you're looking to sell. Now, if you have to sell, that's different. But if you're looking to time the market short term, then you're basically just trading sentiment of other traders. And so if everyone's bearish, you probably should be buying at that point. And if everyone is full of belief and optimism, at some point you can sell into them. Because when everyone is euphoric, that is not the time to be buying assets, right? If you have a short-term time horizon. That is the actual market cycle of sentiment, and it's very, very important. And it's the same with Bitcoin dominance. When you get altcoins going very well, everyone's euphoric, everyone's in a good mood, you should be selling some assets if you want to or need to during that time. It's the same with net unrealized profit and loss as well. Again, all of these will be linked down in the description. And this just shows the Bitcoin price versus its realized price, which is the price at which it comes in and out of wallets. Now, you can take the realized price as basically the cost basis of the network. So if everyone's buying and selling Bitcoin, what price did they get in at versus what is the price now? So if the price is very high and everyone's in a profit, then everyone's going to be euphoric, aren't they? And if everyone's euphoric, every single time, that's the peak of a bull market. Right here, and then you get a return to the trend, which is the trend rate of growth for Bitcoin. If everyone is euphoric and NUPL is showing that, and you want to sell and you've planned to sell, that is the time. If people aren't euphoric and they're maybe a little bit anxious or whatever, then you can sell some if you've made some profits, if you need the cash. But if you're looking to time the market, wait till everyone's euphoric and sell to them, because euphoria always comes back, right? And so you can just look at this when we get into the upper bounds of belief or euphoria, and you're looking to sell some, you can sell at that point. AVIV is also a really good metric we can use to figure out when Bitcoin is overpriced in relation to its trend. And if you're looking to sell, use this as your alarm bell, right? So go back to the start of the video, money supply growth. You can see it happens in cycles. That is not by coincidence. That is on purpose. The central bank in the States and other central banks, they have complete control over money supply, and they push it in these cycles. They want a slow money supply growth like this, but nothing happens like that, right? You move in these cycles. And so when money supply growth and asset prices move way up above trend, at some point, they will pull it back towards trend, and you'll get softening in risk assets. This shows it as well, exactly. It shows how Bitcoin moves up and down in those cycles with money supply growth, as you can see at the start of this video. So we get a big move to the upside and then a drawdown, big move. When the AVIV ratio down here is 1.5 or 2, moving up into this red line, and you're looking to sell, that is the alarm bell to say, look, you wanted to sell, you have to sell at these points. You're never going to catch the top. You can see it does range up at this point for a while, 6 weeks, 8 weeks, a few months. So you don't know exactly what the price is going to be. But if you're looking to sell at some point in these, you do have to actually go ahead and sell if you're looking to. So again, right here at the mid of this cycle, we're not really overdone in relation to the trend. So you can sell if you made profits, it's up to you. But if you're looking to sell somewhere near an overextended peak, just wait for it to get 1.5, 2 and sell sometime in that. You also have to listen to the central bank. You can't look at charts. You have to actually understand what's happening in real life. The central bank's going to tell you, because they come out every week with statements, they're going to tell you when they want to stimulate markets and when they want to draw markets down. If you listen to what they say, then you can make much better decisions. You can listen to them. You can come into the private Discord groups. There's thousands of investors in there, right, in the Crypto Investor course, where you can just ask me, what's the central bank saying? What do you think? And I'll tell you, right? Because if the central bank is saying, we're going to draw down markets and AVIV is at 2, you have to sell if you're looking to sell. Notice throughout this video, I haven't mentioned the price of Bitcoin or other assets that you should sell at. I have absolutely no idea what the price of anything is going to be at the top of a cycle. The best I can do is figure out if the economy is being pushed into stimulus through the central bank and fiscal policy, and try and figure out if that's a little bit overdone, and they'll try to draw it down again. That takes months and years to play out, actually. The price of an asset, have absolutely no control over that, and it's not a good indicator to figure out when something has topped out. You can see here that you thought, well, we're going to top out at this price in the last bull market, right? But it actually went up and made a new all-time high. You just don't know, and you have to actually figure out what's happening in the real world. Like, you have to actually be intelligent and figure out what's the central bank doing, what are interest rates doing, right? That's the important thing, not the price of Bitcoin. However, my chart of truth here tracks the longer-term trend of BTC. This orange line is the trend rate of growth, or the compound annual growth rate over time. And if you're a long-term investor, that should be your cost basis. This 200-week moving average here is the cost basis of investors that have been buying Bitcoin regularly for the last 4 years, because 200 weeks, around 4 years, and the price is above this. Now, Bitcoin tends to top out at a certain amount above these moving averages and the trend rate of growth. So clearly, you can see here we topped out at this line and we topped out at this line. That is why the line exists, because I'm trying to draw that into the future and figure out how volatile Bitcoin can be in relation to its trend over time and where it may price to. This white line is for this specific cycle where Bitcoin may top out, because if you look at previous cycles, the amount of time that occurred after the halving, this is kind of the median time of a bull market where it tops out at. Now, we may be before that, we may be after that, we don't know. And the price prediction changes a lot, because if you top out right now, we're going to top out 100K. If we top out before this line, let's say it can get to 200,000. If you top out after this line, it could go higher because you have more time, right? And that stimulus is coming in through credit creation. We don't know, but this is a general area that you can say up at these levels, right? You can't, if Bitcoin's 200K within the next year, you can't then have another rip-roaring bear market when it's going to go up 10x, all right? We've gone up 10x from the cycle low here, right? that's a 10x move, or well, 500% move, so 5x, right? If it goes up here to 150, that's a 10x move. You can't then have another 1,000% gain up to here, right? Something has to go super weird if that happens. If you're up here and you're looking to sell, that is the error. It's as simple as that. You can't have another bull market after a massive bull market. It just doesn't work like that. This is the trend rate of growth. This is what we're looking at. So if you're looking to sell, it's up at these prices. It could be 180, it could be 250, who knows, right? But you can see this chart of truth in the Crypto Investor course as well. Put this in the Discord groups. But you can draw it yourself on TradingView. I've got a few videos that go through this. I'll link them below in the description on how to actually draw this. If you are looking to sell and you have profits to take, please consider capital gains tax. In most countries, it exists, and it's anywhere from 10 to around 30%. And that is on your cost basis and your selling price. So let's say you invested 1,000 and you double your money, you make 2,000, you sell for 2,000. You pay 10 to 30% capital gains tax on the 1,000 gain, not on your cost basis. So it's your selling price minus your cost basis, your actual profit in the trade. You have to pay capital gains tax in most countries. Here are the G7 rates. Now, there are ways to try and reduce this. For example, if you're buying either Bitcoin or the Bitcoin ETFs in tax-advantaged accounts, like a Roth IRA in the States or an ISA in the UK, you have certain yearly amounts that you can put into those, and they are free from capital gains taxes in those accounts. That changes all the time, and tax treatment for you personally and in your jurisdiction may change. So I can't give you specific advice on that, but you have to worry about this. If you don't sell, you don't pay the tax, but then is the price of the asset going to come down at some point? Now, you can also write off losses against your gains. So if you have made profits in some cryptos or other investments, and you've made losses in other investments and trades, you can net that off against each other. So it's just the net gain that you pay capital gains tax on. If you have a loss, and even if you make a net loss in this year, in a lot of countries, you can roll over losses into the next year and still write those off against potential gains. Anyway, I'm not a tax consultant or anything, but you have to figure this out. Now, also, I want to focus on longer term investing here, because if you've got crypto to sell and you've been investing and you think, no, I want to sell because I've got things that I want to buy. Either I'm going to put a mortgage on a house, or there's some debt that I want to pay off and know that I've got the money. That's all great, and definitely go ahead and do that. There is an important plan we need for the next 10 or 20 years though. You're probably around 30 years old, maybe something like that. So you're going to be working for the next 20 years, right? And yes, we all have to work, and we all should work when we're young, right? That's just another way we can gain income, and we need to do that, right? If Jeff Bezos isn't going to retire till he's 60 and Elon Musk is still working, we're going to be working, okay? So 30 years to 50, that's 20 years of work. Let's figure out a plan here so that we can retire as soon as possible. Not even having to retire, but if your retirement is done and finished, and you know that from 60 till when you snuff it, that is finished and you have the investments there, your whole entire working life can be much better. You can take a job that you actually enjoy and not have the one that you hate because it's paying more, etc. So once your retirement is done, your whole working life, I think, becomes way better. It's not that you can retire at 40 or whatever. It's that your retirement is actually paid for, and so the rest of your working life can be much sweeter. So let's look at Bitcoin and its growth rates. You can figure this out for Bitcoin. If you don't like Bitcoin, then you can go to the stock market, right? The S&P over the last decade is annualized at 12% a year. The NASDAQ index over the last decade is annualized at 18% a year, right? So figure out the growth rates of that. So for Bitcoin, I personally think that we're going to annualize, let's say 25% a year. So I went to AI or Grok here, and I said, the next 5 years, it's going to annualize at 28%. And then the next 5 to 10 years at 20%, then 17%, then 15%. Right? And so what is the price of Bitcoin after 20 years if we have these growth rates? It does the calculation, and it says the price of the moving average of Bitcoin is 1.7 million per one Bitcoin, but the actual market price of that Bitcoin could be way higher. It could be, let's say, 2 million or even higher than that. Let's just do 1.7 million. That's the moving average of Bitcoin, right? Moving up at those compound annual growth rates. So in 20 years, 1.7 million per Bitcoin with these growth rates, which are not, I personally believe are not like overextended. I think this is pretty much the bear case. Now we move down, and I say to Grok here, I want to invest $100 a week for the next 20 years, from 30 to 50. Okay, so the return on investment is 1.8 million. You've made 1,800% on a return on investment over those 20 years, $100 a week. Can you find that? That's a $104,000 investment, but the portfolio is valued at $2 million. $2 million portfolio at 50 years old, but it keeps annualizing, right? It keeps annualizing, let's say 15%. Stocks go up at 12%, NASDAQ 18%, right? So I think 15% for Bitcoin is more than acceptable. You've now got a $2 million portfolio annualizing at 15%, which is $300,000 a year in risk-adjusted income at 50. Your retirement's done if you want to retire or if you want to keep working and just do something that you actually enjoy. That is the goal. Not selling now to buy something unnecessary. If you're taking profits out to buy a house or anything like that to make your life better, super cool. But we don't want to just take profits just because and try and time the market. We want to get in $2 million portfolio at 50, $100 a week. It's achievable. Check out the links below to all of these resources. The Crypto Investor course is down there as well, which goes through all of this in much more specific detail. And it's got private Discord groups as well, so you can come and ask me questions. I'm James Ismail. Cheers for watching, and I'll see you in the next one.